LSMA. This stands for the least squared moving average indicator. We use it in technical analysis to identify trends and trading signals. It's actually a regression-based trend indicator. Actually, it smooths out market noise over a specified period. So in other words, it's going to help you make better decisions about your trading. So to fully understand how any indicator works, it never hurts to know the calculation process. Here it is here. And if you want to geek out over the calculation, have at it. Just know that your charting platform will do it for you. And one key advantage is it has this ability to filter out short-term fluctuations in price movements. It smooths out that market noise that we see every day. So I think it provides really decent signals depending on the trading strategy you're using. So when you use this, you can look for crossovers with other indicators. You can look for support and resistance levels for confirmation. It's important to note that no tool in trading is foolproof, and there's going to be false signals at times. Now, the LSMA and the SMA, some people get these confused. There's a difference. So we can look at it like this. Think of an artist and their brush strokes, and then look at how a child scribbles with their crayons. Now, both of these indicators are going to capture trends in the data, but the LSMA does so with greater accuracy than the SMA because it just takes into account a few more variables. One of the primary things that's going to distinguish these two is the calculation. With the LSMA, it's a pretty complicated regression analysis calculation, but the SMA is just an average over a set time period, a simple average calculation. And the SMA may provide less signals that are accurate because it is so simple. There's a lack of sensitivity to sudden market changes. So you got to know the difference between the two. So if we look at the LSMA as a trend following indicator, because that's what it's usually used for. Bullish trend, bearish trend, it's going to show you. So when price crosses above the indicator from below, well, this could signal a potential uptrend or a bullish momentum move. On the other hand, the opposite is true. If price crosses below it from above, we could be looking at bearish. Now, there's pros and cons with everything, and you got to consider them. It doesn't matter if it's a strategy or a trading indicator price. It doesn't matter. You got to make the decision to use these knowing the pluses and the minus. Now, whether you're going to use it or not, at the end of the day, it's going to depend on your own personal preference. It's going to depend on your goals, your strategy. There is no one-size-fits-all solution when it comes to technical analysis tools. There is no best. Best is all relative. So how can we trade using it? Again, it's a trend indicator, very little lag. We can use that. It's a reversal indicator. Can use it for buy and sell signals. So for example, if there's a recovery in price after a downtrend, traders could see a buy signal from the price and the indicator. So here's some trend signals to look for. A bullish crossover where the current price crosses above the indicator. An uptrend indicated by higher highs and higher lows. That's an uptrending price action. A bearish crossover where the current price falls below the LSMA. Think about moving average crossovers. It's a very popular technique for retail traders. So this is a 10 period and a 50 period LSMA. So we have a strong crossover, and that sharp angle of that 10 period shows that to be true. You can take the cross as a definite signal. You could wait until a candlestick puts in a lower low, as seen by the arrow, to avoid a false buy signal on the cross. So this arrow shows a short-term pullback, and then traders can then buy stop the high. So this is a strategy that I highlighted in a video about trading the daily time frame. Watch that video. But in short, we're just looking for two candlestick lows completely above the LSMA. So this example is a 25 period. The arrow shows the second candlestick that plots above the average. So to ensure a definite buy signal, a trader would calculate an ATR buffer above the highest of those two candlesticks. And again, that's covered in the video. I suggest you go take a look at that. You could use this indicator for trend direction and then another indicator of your choosing, like an oscillator. And I like to use the 310 oscillator. The price breaks a trend line with a higher high, gives us an uptrend. That's a signal. LSMA is also broken by price and it's trending upwards. You would use your own entry tactics to enter these trades. At the top of the chart, the 310 oscillator is putting in a lower high. Price puts in a higher high. This would be a sign to consider exiting the trade because we're looking at divergence. Notice we're just touching on this indicator. The best thing to do is pop it on your charts and check it out. I think if you master this, I think it could be a game changer for some of you that are having problems moving forward in your trading. So take the time to learn this. Like I said, put on your chart, check it out, switch it out for another indicator. Perhaps you're using a EMA. Use this one, try it out. for your trading strategy. See if you can get better results. Make sure you hit like and subscribe. If you have any questions, pop them below. Hope you like this indicator. Let me know in the comments if you use it.